Hey, what's up guys? How are you doing? Kenyans, MoneyMatters here once again as usual. We're back with another video for the week. I hope you had a lovely week if you're watching this on a weekend, and if you're watching it on a weekday, I hope you're having a good week and a good day. Anyways, I hope everyone is fine. I have been traveling a bit, and guys, by the way, I have a different channel called Ken Uko or Ken Adventures. You need to subscribe there if you want to see my travel life, my other life besides financial stuff. So yeah, make sure you subscribe to that channel as well. Follow me. I'm very active in my life. I travel a lot. I speak about a lot of stuff. I work out. I'm properly involved in so many things. So I'm not just all money talk. Money is nice, but again, the same thing can be boring, right? So we have to spice it up. Life is about experiences and diversity. So anyways, follow that channel. Check out Ken Uko's channel, and I'll leave the link below so that you can always follow me if you want to get a sneak peek of what my life is outside financial talks. Let's get into the video. And this is more of like a usual thing I do. When there's a new bond that comes out, we have to talk about it. Why? Because bonds are my favorite investments. Yeah, because they're really good investments, guys. They're really like some of the best investments you could ever make. And especially when you get an infrastructure bond which is tax-free, then why do you not invest in it? At a time when everything seems so unstable, stocks all over the world are, kind of up and down. Trump is busy with the tariff issues, there's uncertainty in the market, and the market hates uncertainty. And so there's just so much happening right now. If you want stability, something that you can actually rely on fully and know that in the next 5 months or 6 months or 1 year, I'm going to get this amount of money, then this is the right place to be. Bonds. And that's why I like bonds. And that's why I think they should always be in your portfolio. So again, I'm going to be talking about bonds in Kenya. I always do this when bonds come out, and shout out to those who always tell me, hey, this bond is out already. You haven't done a video. Thank you. Anyways, we have a new infrastructure bond. It's been a while since we had one, but yeah, there's one right now. If you're looking for that infrastructure bond, you've been sitting on the sidelines waiting to get that infrastructure bond. It's time. We now have an infrastructure bond open. 15 and 19 years infrastructure bond. I'll share my screen. I'll show you all the details of this bond. But the main thing is you need to invest. You need to start the process of investing, even if you're just putting 100,000 Kenya shillings. If you have the capacity or the opportunity to kind of, bulk up more money, put it into a bond and fix it, then it makes more sense than just fixing very little amount of money. Let's say you don't want to fix 50,000 for 20 years. It just makes no sense. You need to put it somewhere you can bulk up, build up before you really invest. There are many opportunities you can bulk up, like money market funds, CDs. You can even do short-term ones like treasury bills. If you're still expecting some money, or if you still want to bulk up, then you can do short-term ones. I always recommend you put in substantial amount of money because you lock it in for a while before you actually get it back. So that's my advice on bonds. Bonds are very straightforward. I've spoken about how to buy them from start to finish, all the details, how you can buy them. So that should be easy. If you don't know how that process works, check out my channel on bonds. Just Google on my channel bonds or buying bonds in Kenya. You will find loads of videos about bonds in Kenya and about the process of buying bonds. Anyways, guys, let's jump into my laptop and then let's see this bond that's currently on offer, the details of this bond, and how can you buy it. I'm gonna mention briefly, and anything you might want to know about this particular one. So let's go. So guys, this is the prospectus for reopened. When we say reopened, it means this has been opened before. It's a reopened bond, 15 and 19 years infrastructure bonds. I have flew a bit, so forgive me if I sound a bit foggy, but yes. So 15 and 19 years infrastructure bond. Central Bank of Kenya, obviously, as the fiscal agent. The bond is IFB1 2018-015 and IFB1 2022-019. That means the one is 15 years, this one is 19 years, or at least was at that time. The tenure as at now, obviously, is it was 15, but now 7.5 years to maturity because it was 15 from 2018. We're in 2025, so obviously it's almost halfway there. Then the 19-year one, we have 15 years to maturity. So you still have some time on that one. There's no problem at all. 7.5 years, 15 years, getting good returns is not a problem at all. So you still have some time on this bond, whichever one you choose to buy. That's just the reference number. Then the coupon rate is 12.5% for the 15-year one, which is now 7.5 years, and 12.9% for the 19-year one, which is now 15.6 years. Now, obviously, 12.9 is just 13%. 12.5 again, That's a little bit lower, but there's no big difference. A difference of 0.4. That's not big at all, at all, at all. So depending on how much you want to, how long you want to lock your money and how much you're putting in, you can go for either or, to be honest. And again, looking at the environment now, you can't really know what's going to happen in the next 7 years. We might have lower rates, we might have higher rates, who knows. But in this case, I would advise that depending on how much you're putting in, if you're putting in a lot of money, then you should go for a lower period of time, because then that lots of money, you don't want to lock it up for a long period of time without good returns. If you're putting in something just, maybe just $1 million or $2 million, then there's no problem going for 19 years at all, because then 13% return on your to 1 million is not bad at all for 19 years. It's a guaranteed return. So it depends on what your strategy is, how you're thinking about it. If you want to use the money in the next 7 years or so, then you'd obviously go for the 7.5 year one. If you want to use the money in the next 15 years, then you'd probably go for the next 15 years. If you don't foresee yourself using the money anytime soon, then the longest one possible is the best one for you. Now, again, like I said, the rates are not so different. The coupon rates are not so different in this case, so there's nothing so much to worry about. It just depends on your preference in terms of timeline. There is no withholding tax as with infrastructure bonds. That's why we love them. That's why we buy them. That's why I make so much noise about infrastructure bonds. So there's not so much, there's no withholding tax. That means whatever you get from the bond is 100% your money. The maturity dates for the 15-year one, or the one that is now 7.5 years, I'll say 7.5, is 10th of January 2033, and then the maturity date for the 15-year one is 28th of January 2041. Then they have told you the redemption structure here. How do you redeem your money? You see, by 2028, 40% of unencumbered outstanding principal amount. Unencumbered just means anything that hasn't been borrowed against, or does not have any kind of caveat or loan against it. Then the final redemption of all outstanding amounts, any amounts up to 1 million per CDS at amortization, will be redeemed in full. The same thing again, 50% by 2032 and 100% at the final date. The period of sale was between 21st, not was, but is, the period of sale is between 21st of July and 13th of August. I'm doing this video on the 7th of August, so you still have 6 days. You can place your bid, but by 13th of August at 10 a.m. this will be done. The auction will be done on the 13th of August, on a Wednesday next week. And then the settlement date is 18th of August 2025, and the amount is 90 billion that they are seeking to get. The purpose of the fund obviously is for funding infrastructure projects. Non-competitive bid amounts, if you're just going to go non-competitive, you're looking at a maximum of 50 million and a minimum of 50,000 Kenya shillings. So if you want to invest in this bond, you're looking at 50,000 Kenya shillings minimum, and a competitive bid of 2 million per CSD account per tenure. That's different, but most of you will be going for the non-competitive bid. You just go in, and because you already know the coupon rates, that's what you're expecting, you go for your bid. Since it's non-competitive anyway, you're just going to get the market rate or the average bid rate, and which again, I know it's going to fall within these coupon rates anyways, or if it doesn't, then there will be a premium payment or a discounted payment. Whatever works, but it's going to be around the same amount. Anyways, all successful bidders should obtain a payment key and amount payable from CBK-CSD Investor Portal app. This now is so efficient. You can easily get this information online on the CSD Investor app. You can do everything. You can bid, get results there in the app, do your payment, of course, through the bank, and then you can get confirmation there as well. Everything, you can monitor all the processes going on with the account in there. So yeah, so it's a very straightforward process. The transactions tab will be open, at least we'll have the information by Friday 15th of 2025. Don't default, because you will be banned from investing in future government securities. So yeah, that's it. There's nothing much. Secondary trading in multiples of 50,000 commenced on Monday 18th of August 2025 for these two bonds. So if you want to trade them in the secondary market, you know exactly when. So we're looking at Monday 18th of August. So down here again, you have all the payment dates, when you're going to get your money, basically when you'll be smiling to the bank. Anyways guys, this is a very straightforward bond. There's nothing much to look into. It's a very good bond, I would imagine, if you want to look at the dirty and the clean price down there. So guys, this is a very simple investment, very straightforward. If you are a beginner, the first time you're investing, just get into your DAO CSD portal, place a bid, and you can ask me questions in the comment section if you have any, and then tell me if you get this bid or not. Put in whatever it is you can put in. Like I said, I recommend having certain substantial amount of money, but again, if you feel comfortable putting your 50,000, 100,000 in the bond, there's no problem with that. That's your strategy, as long as it works for you. Okay guys, I hope that's helpful, and I hope that's informing you that there's a bond out right now. So get out there and bid for the bond. Make sure you make your settlement in time, and you're in for the earnings until at the time when that bond will be amortized. I hope this is helpful, guys. Until next time, I'm out. I'm having crazy flu today, so sorry about that, but yeah, I try to make sure I am consistent.